Good afternoon and welcome to this webinar where we will examine some of the top level findings in the 2021 edition of the Home Improvement Report, which was published yesterday by Barbour ABI Group, and what some of the implications may be for the products and materials sectors. My name is Damon Schünmann and I'm a freelance journalist as well as a strategic consultant for Barbour ABI, and I've been writing about the construction industry for the last 17 years or so. Joining me today is Brian Green, analyst and commentator on construction and housing and author of the Home Improvement Report. Hello, Brian.
Hello.
I'm also very pleased to welcome Noble Francis, who is the Economics Director at the Construction Products Association, or as it's often commonly known, the CPA.
Hi, Damon.
And I'm delighted to introduce Nick Snazell, who is Market Insight and Strategy Manager at Saint-Gobain Building Distribution. As the title suggests, this is the distribution arm of the multifaceted materials business, and pertinently for this debate, Saint-Gobain is also the parent organisation of builders merchant Jewson. If you do have any questions for our panel, please type them into the Q&A box at the bottom of your screen. And if we do have time at the end, I'm not 100% sure that we will, but hopefully we will, we'll try and answer as many as we can. Right, so let's get going. First, I'm going to turn to you, Brian, for a brief outline of the report and ask you to highlight what you consider to be the three key findings.
Yeah, basically what the report does is it looks at planning applications, and then it looks at the trends in those planning applications and how they're changing over time, and we also look at the types of planning application in terms of what type of home improvement activities going on. Broadly, the main findings are that there had been a slow decline in activity in planning applications for since about 2016. I mean, it started in London and was generally drifting off elsewhere. And we got to the beginning of this year and things were continuing to fall. Clearly, when the pandemic, when COVID-19 started to affect and the lockdowns were called, there was quite a big dip in activity. But then what we found is that there was a sudden surge and a rise. So it ended up with the year overall gaining, and in most places it did. In most areas it did gain, with the exception of London. So that's the kind of overall thing. There was a big surge afterwards. In the home improvement activity as measured by planning applications. Broadly, though, what was interesting about that was we were seeing a regional change. That is to say, an awful lot more activity in the northern English regions, to a lesser extent Scotland and also in Wales. And what we also saw was, you might think, well, actually, maybe that's just everybody leaving cities, but it wasn't just that. There was a different kind of pattern with it merging across some rural areas and some urban areas. So you were seeing the outer regions, outer boroughs, if you like, of places like Manchester, Liverpool, Leeds, Birmingham, Newcastle, etc., doing quite well. But you also saw some of the rural regions, say in North Yorkshire particularly, doing very, very well. But also within that, when we start looking at it, we're looking at the types. What was very noticeable was there was a surge in stuff that might be regarded as outside of the main home. So things like garden buildings and works were up about 8%. And intriguingly, garages or work associated with garages was up quite significantly by about a quarter. So, and looking at that, you can start to see a lot of that was driven by garage conversions, but also they're presumably within that people building garages as well. So that kind of fits with that sort of home working and wanting more space area. There was another intriguing thing there as well, which might play to the environmental thing, although you have to be a bit careful because of the volatility of the sector. There was a surge in applications for solar panels. But if we dig deeper into what might be regarded as the sort of the bedrock of home improvement type work, certainly from the construction sector's perspective, I mean, we did see an overall rise in extensions, but actually what you found was they were down in places like London, but up elsewhere. And what we also saw was we did see a drop in some of the areas associated that you would associate with with London, particularly things like basements and to some extent conservatories which need planning permission, which tend to be quite strong in London, and roof terraces. These dropped away. So it was other things happening in other parts of Britain really that were driving the applications. Interestingly enough, and that while we saw a drop in loft conversions, that drop was totally down to the drop in London. Whereas actually, if you take London out of the equation, you see loft conversions growing elsewhere. So it shows that it was a geographic pattern to that. So I think they're the sort of the main three kind of trends that we're seeing: a change in the type, a change in the region, and a surge overall.
That's really interesting, actually. Thanks, Brian. I'm wondering if the drop in basements may in some part be down to the fact that requires some really skilled labour, and that people are a little bit unsure of of having workmen in their houses, particularly at the first part of the initial lockdown. But I guess that's just speculation on my part. But thanks for the summary. Here's a question for Nick. What's been your experience, and as far as you're aware, that of other builders merchants over the past year?
Yeah, so over the last 12 months, it's look at the data, it's very much a year of two halves. So we had our lockdown impact end of March, where we had to close pretty much all of our builders merchants throughout the industry. And we were able to open and retain some activity where we were delivering to public sector infrastructure projects on delivered only basis. But then as we were able to open up post lockdown, we started to see quite a pickup in activity. And it's difficult because we have an industry body which monitors a lot of our merchanting data called GfK. And if you track that data, then the first half was down nearly 24%, and the second half was up about 3%. And in there, you have to understand we are selling to all types of customers. So the major house builders, regional house builders, local house builders, major contractors, regional contractors, and then probably the big chunk of the sales is actually through the small, medium trades and the cash. What we sell to trade in cash format or to a retail consumer in cash format. And you can't get industry stats at that level, which is effectively what is probably most linked to the home improver data. But what we did certainly see in terms of product group movement is, the 12 months of 2020 was the only product group that actually grew, even with a lockdown period, was landscaping. Probably not that surprising to people on the panel, on the call. It's very hard to walk down your local around your local neighbourhood and not see a skip outside and some landscaping kind of work going on. And that certainly has come through in the data, and it's continuing into Q1 as well. That growth in landscaping is way beyond our expectations that we had perhaps when we're looking at forecasting the activity through the year. And there's many things behind this which probably Noble will go into. The working from home, the savings that people have generated and that want to spend the money on the home has certainly been driven through the industry, but it's that outdoor activity, because maybe what you alluded to earlier, Damon, which is that willingness to have trade, well, sometimes your property or your overall home, but not so ready to have people inside the home unless it was an urgent repair. So we definitely saw that growing, but then to add on to that, you've also got the appetite of the homeowners to spend money on their garden because they want to spend time in their garden when lockdown is easing. So that's the biggest trend we've seen so far, is certainly that landscaping part of the market is the one that has really taken off. I'm now seeing internal activity around the kitchen, bathrooms, plumbing, heating has picked up. It took a little longer to pick up, not surprising, but also because of the way projects were perhaps delayed as a result of lockdown, and then people probably getting the externals, getting the roofs weather tight, and then when the homeowner is ready or when the builder is ready to get the subcontractors in, then that just takes longer to flow through the system.
Funny old thing as well, an amazing sort of period of weather in spring and summer last year makes people think of their gardens, in addition to the whole sort of being trapped in your sort of home's footprint for large parts of the day. I have a follow-up question for you, Nick. Brian highlighted 3 trends emerging from the report that he sees as key. Now, some of the things you may have just covered already, but is there anything else that that you think is worth noting from the report in terms of sort of key trends?
I think the report picks up all the key trends that we've identified in terms of the data we can track. I think the biggest thing for me is understanding how long will this go on for, and I think the data we've seen yesterday in the news, record number of housing transactions going through in March, is perhaps what will support the home improvement applications into 2022, because what we're seeing at the moment is a very strong activity, but it's a lot of it is driven by the retail customer. So I think one of the paint manufacturers has mentioned they had a big uptick in the retail sales of paint last year, but the trade was just down at just very small amounts. But obviously we had lockdown, and you still had ability to buy things as long as you could do some form of click and collect or click and deliver. So I think we'll see, but a lot of that stuff sits outside of home improvement applications. So we have all of the stuff which is linked to permitted development as well. So there's all that data which we don't see as well in where the report picks up, but doesn't get into that level of information. So there's all that sort of smaller value stuff going on as well, which is not within the report that we see as a merchant. That's another thing that's important as well.
Sure. Thanks for that, Nick. I'm going to turn to Noble. Here's a question. From the overall view of material supply and the industry in general, how would you characterise the period from your position as an economist, and obviously the data that the CPA is seeing as well?
Well, from my perspective as a forecaster that forecasts across 30 different construction sectors, it's been quite a year, I can tell you. What's most noticeable is that if you compare it with previous recessions, we have lots of lead indicators, we have lots of factors that go into our models that make it easier to look at what's coming ahead. What we had this time is not a traditional recession. We had a big hit to activity because of the initial lockdown. And then afterwards, we had 2 subsequent lockdowns during which activity could continue. So it's a highly distorted period. And because it was a shutdown of certain sectors of the economy, what you end up with is a situation where you couldn't go into people's homes during the initial lockdown. And then there was a question about how reticent would homeowners be to people coming back into their homes, which is something you intimated right at the start. So we saw an unprecedented slowdown during the second quarter of last year. But what it meant is that there was always going to be a surge in activity that came afterwards in the third quarter of last year. And that's because of the pent-up demand from the initial lockdown combined with normal workloads. But once you add in government overheating the private housing market through the stamp duty holiday, and it's worth noting that you tend to see an increase in improvements around 6 to 9 months after the purchase of an existing home. So that clearly boosts the market as well. And then once you add in the race for space, if you like, that Brian pointed to and the report goes significantly into, then you're looking at an unprecedented rise in improvements activity. And the firms I speak to say that they haven't seen anything like it. And they've been in the industry for 30 plus years. Now, working from home has clearly impacted this, but we shouldn't underestimate the extent to which the furlough scheme has also underpinned this, because rather than seeing a sharp rise in unemployment, we've sustained jobs, we've sustained household incomes and consumer confidence. And it's meant that you've got more people at home, either working or on furlough. And at the same time as this, you end up with a situation where subsequent lockdowns mean that other avenues of spending haven't been available, whether it's going into shops or hospitality, cafes, bars, restaurants, tourism. So you have households that have increased time at home. You have households that have sustained their incomes, but have fewer costs, whether it's commuting or hospitality spending or travel and tourism. So we've seen an incredibly sharp recovery in improvements activity since Q2 last year. And at the same time, we've seen our M&I activity and new build activity recover around the world as well. Now, the important point to note here is, from a construction products perspective, what that means is that globally, you've got increases in demand for imported construction products. So what we've seen is that products like copper and steel, paints and varnishes, roofing products, plastics and polymers have increased 30 to 40% in price. And you've seen timber increase by 60% plus in price. And that's assuming you can get the products. So going forward, Nick mentioned a question about how long the sustained increase in demand is going to last. Well, supply may pose a great uncertainty there as well.
So certainly a natural break there, as in a breaking effect that we may see. In a sort of an example of slightly lazy journalism, I'm going to ask you the same follow-up question that I asked of Nick. Brian highlighted 3 trends from the report. How do these fit with what you're seeing? And is there anything else that you think is worth noting, specifically in the findings of the home improvement report?
I think the report highlights some of the issues we've identified and actually goes beyond a lot of them. So it's worth not just reading the first few pages, but actually getting into the nitty-gritty of it. From our perspective, the race for space, households' desires to have additional space is one that firms have been saying to us has been a key driver of the demand. Not just space, but good quality space as well. So what we've seen from the firms we've spoken to is the garages activity that Brian highlighted, and also garage conversions over to offices, new large sheds for office and leisure space, decking and fencing, which is the good quality outdoor quality of life space, which is what Nick was pointing to as well as Brian's report. Decking and fencing particularly buoyant, and from our perspective, what we've seen is very much what Brian was highlighting in terms of London relatively subdued after that pent-up demand came through last summer. So London was still doing reasonably well because of that pent-up demand, but then it faded after those projects were finished, those projects that started pre-COVID. And so the activity is very much around the Northwest in Yorkshire, which is what the report highlights very well.
Okay, thank you for that, Noble. It's certainly in some cases, I guess you can't easily go down because we've talked about basements. It's slightly less hard, but still technically difficult to go up without expert help in your house, and going out into the garden is is an obvious route there. So I think all 3 of you have identified that. I think this next question is for Brian in the first instance, but I want to come to Nick and Noble afterwards. The report looks at applications, but clearly not all home improvement work needs one. What's your take on the wider home improvement market, and is what we're seeing indicative of the overall change in activity?
If I unmute myself, what you see with this data, if we track it back, is quite interesting, because it shows, it mirrors the activity in the construction sector's private housing repair, maintenance, improvement. So it's a sort of contracted outwork, which is what you'd kind of expect from something with a planning application associated with it. It doesn't really look too much, it doesn't say that much directly about the DIY sector. So we've seen this really strong link. So what happens normally is you see a rise in the applications, and that seems to correspond with a rise in private housing repair, maintenance, improvement work within the construction output data. So what builders are earning about a year later, and that seems to be quite strong. I mean, it's quite interesting if you look at the beginning of the surge before as we came out of recession, you saw a bigger rise in private housing repair, maintenance, improvement, because that was effectively happening in London, where the projects would have been more expensive and busier. And then it sort of smooths out as the rest of the of Great Britain picks up, and then it starts to drift off a bit because London's drifting off quite quickly. So you're getting a kind of a regional effect in terms of the scale of projects. But it does seem to be a very good measure, or a good indicator, of the private housing repair, maintenance, improvement sector of construction. So that's true. I mean, what we don't know is, because we haven't got the data afterwards though, is how this sort of jumble of factors that's happened around the pandemic will happen, might change that relationship or modify that relationship. I mean, one thing that I do think is interesting is there's a slight hint, I mean, I say slight hint and with huge caution, but in the data that people are doing more but less ambitious home improvements. That might partly be the nature of the regional split, but if you think about that, that does suggest that there's an awful lot more going on as well, lower down the spectrum in terms of home improvement. So that suggests that there is a body of activity happening there. So I just get a gut feeling that the construction activity will continue broadly in line with this once we smooth out the ripples, but there is just this large amount of work generally going on. So that's how I kind of see it. Probably better with the graph, so people read the report, it might come through a bit clearer there. But that's the kind of mood I get. So I do see this as indicative of a lot of work in the pipeline. How that will pan out, and the comments made earlier about the availability of skills, the availability of materials, prices of stuff, how that will affect things, it's really hard to know at this stage, but they will all play into the mix.
Thanks very much, Brian. Over to you, Nick. I'm just going to repeat the last part of the question. So, your take on the wider home improvement market, and is what we're seeing indicative of the overall change in activity?
Yeah, I think just to pick up on some of the things that Brian was mentioning there, the interesting thing for me is is that lag effect. So the applications, historically, we always see maybe a 9 to 12 month effect between an application and the activity on the ground when you try and model it. And what we may see, because of some of the points raised here, is the delays in product availability and the delays in getting a builder, because the demand for the builder has gone high as a result of the amount of work that requires trained activity. So for me, does that mean the lag effect gets extended more than we would normally see? So from a hopeful point of view, that might mean that this mini boom we're seeing could last a little longer than we would normally anticipate. So if we have a record number of a record number of house purchases going through before what was going to be the stamp duty ends at the end of March, then does that mean you wait a little bit before those home movers then decide to put planning applications in, and that gives us a little bit more activity, into 2022. So I suppose that's the hopeful part for me in terms of the industry's been continually supported at these very strong levels, which is very good for the industry. And that's, I guess, my main hope. And the other thing that we just have to be mindful of when we're looking at the applications or the data that we track is the when you look at the comparables. So we have obviously different lockdown periods in devolved nations and even in regions in the Northwest, for example. So sometimes we have to be careful when we look at our data, the tracking data that we look at, is that we're mindful of that aspect of it. But the main thing for me is there is only a small amount of what builders and what we define as builders you would want to employ, and people will wait. People will wait 3 months, 6 months, if that is where they got the very positive recommendation from friends or family. So for me, it all looks quite positive.
Okay, thanks very much, Nick. And a view from you, please, Noble, on the same area.
Yes, Damon. I mean, I broadly agree with Nick. I mean, from our perspective, the repair and maintenance side tends to be relatively flat. The improvement side is double-digit higher than it was a year ago, and if you take the DIY element, that's even higher. You've got people with finance, little else to spend the money on, particularly during the second and third lockdowns. They've accumulated savings, and because they've accumulated savings, then I think it's sustainable short term. So the applications that we've seen go in are likely to sustain activity, but what Nick suggested is potentially true, that the difficulty in getting a builder or getting the products or both may mean that that's actually pushed the lag between application and activity. So sustaining the boom in improvements, maybe it's less of a boom than the demand would suggest, but for longer. The only question mark over that is whether over this period between the application and it getting on site, whether the rise in costs, both from the labour side and the product side, puts some of those people off. Now, the fact that they've saved so much, the Bank of England estimates that households have £160 billion worth of savings, and the rate of house price inflation suggests that the rate on the return on any investment you do in your home is still there. So that suggests possibly it would still be worth doing it despite rises in costs for labour and products, but it does put a little bit of a question mark on there.
Thank you. So here's a general question. Turning to the wider issues that are emerging, what do you think is driving the rise in home improvement? For example, there's a lot of talk about people simply wanting more space. However, you could put that argument into a sort of pre-COVID world. How do you see it? What other factors might there be? Who'd like to take that on?
I'm happy to start on that one, really. I think there are a number of drivers. I mean, if you look at it, the big driver is house prices and house price rises. And if you were to look at where you're seeing the increase in applications for home improvement, you're seeing them in the northwest and in Yorkshire, and they're both seeing much more significant house price rises. And that all makes perfect sense, as Noble was alluding to. The fact is, if you're doing some work on a house and the price is going up, that's worth more for you in the end. There's the other element of, if prices are rising in your area and you're struggling to get the house you want, it might look better. It will increasingly look more favourable to do an improvement rather than a move. And we've definitely seen that shift occurring, with people doing more improvements and moves over that period, largely, I think, because of the restrictions on moving to some extent. So I think that's definitely one. I mean, obviously, you've got to put in the reappraisal of the home into that driving thing, the driver's thing, the working from home, and the race for space. What's interesting is I don't know how much we are likely to get or coming through already with people's desire to do energy efficiency stuff at the same time as. I suspect that's something further down the line. And as obviously, as Noble mentioned, there's people who've got large amounts of savings, and the people with those savings are the people that are well-to-do, are more likely to be those that are well-to-do and more likely to invest in home improvement. There's another rather quirky thing going on as well, which is if you look historically, you'd see a relationship between car sales and home improvement. What we're getting at the moment is car sales are plunging. Now that home improvement had actually been following that path, but with lockdown, home improvements went up and car sales went down even further. There's a number of different factors there, the electrification of cars and people maybe holding on and purchasing, but basically what it looks like is people are less prone to spend a lot of money on a car. So if they're not spending that money on a car, maybe they'll choose to spend it on something in the house. There's a lot of confusion over that. And there's one other thing that I think might be worth throwing into the pot that I can think of is this notion of the boomerang kid, which has grown up over the years. Whereas, you know, when I was younger, you left home and you left home. Now people are going to university, getting a job and then ending up going back. And the numbers of people in their sort of 25 to 35 age group that are now living with their parents is quite substantial. So that may be a driver for some families to invest in improving their home just to make more space and make it more tolerable for the rejoined family, if you like. So that's certainly a factor.
Thanks very much. Unless anybody wants to immediately jump in there, I'm just looking at time, and we're slightly running short. So
the only thing I'd briefly add to that is that there is a slight factor here, which is that there's an awful lot of improvements works around the home that from a psychological point of view, you always intend to do, but you just never get around to. And there isn't really an excuse not to do them now because you've got more time at home and you've got the accumulated savings. And so you're sort of being pushed into it. And so there has been a boost from that as well, which is worth noting.
Yeah, absolutely.
Hence the fencing and decking and things like that, which yeah, I'd just add that.
Yeah, absolutely. Everyone's got a lot more admin time on the one hand, and getting the jobs done they've been putting off for too long on the other. So I'm sure that has to be a factor. I suppose the most obvious question that most people will be asking, and one of the most valuable questions to get some insight on, would be whether we're seeing a permanent shift in the market or whether this is closer to a one-off event. Now, actually, we've touched on this already in sort of elements of your responses so far. But I'd be particularly interested in your view on this, Nick, coming from the builder's merchant perspective. Obviously, it affects the business model of that element of Saint-Gobain. So what do you think? Permanent shift versus sort of one-off event?
I think it's a bit beyond a one-off event. If we think about what's driving some of the reasons for doing what we're doing, in terms of more people spending money on the home, you know, working from home is going to continue. It's not coming and just disappearing, and we all go back to 5 days a week. I'm sure many people on the call or we're aware of, you know, companies they work for selling off or exiting some of their offices. Talking about going to a 2-2-1 week where you do 2 days in the office, 2 days home, and you choose what you do with the fifth day. So there's going to be, and that would mean you're still going to spend the majority of your time at home during the working week. So there's people who are homeowners. So for me, if they haven't done something already, they will either have plans to do it or be thinking about it, either moving or improving. Or moving then improving, because often if you are going to move somewhere, you won't like it exactly how it is. You'll want to do work to that property, whether that needs a planning application or not. So I think there is a dynamic change in the marketplace. There is a spike in here at the moment, I would say, certainly around a lot of the retail expenditure, because, you know, the level of paint sales and people just doing what they can and all themselves about trade So maybe some people doing DIY projects using YouTube videos or working with people who are in that bubble to get things done. But I think whether the planning application will keep going and the house moving bit will keep going, I'm not sure about that part. But at least for the next 12 to 18 months, it looks okay for the future. What beyond that is, that's the impossible bit to predict. But the one thing that we're certain of is that the working from home for the office, what were traditionally office-based people, will be by and large be a permanent or semi-permanent, if you want to call it, back from a 2.5 or 3 day week at home. So that will lead to more and more of this activity, as perhaps even thinking intuitively, as we come out of some aspects of lockdown, people start to see other people's homes and think, oh, look at what you've done. Oh, I'm like some of that now, thinking about it. When they go to other people's gardens, I think that will also have a little bit of a knock-on effect as well. So again, short, medium term, okay. I mean, long term, very difficult to know, and a lot of it is down to government interventions. Stamp duty had a big impact, etc. We need to see what will happen with the homes and how, which Brian alluded to, and how that will that could create another improvement in a couple of years as we drive towards eventually coming off gas.
Okay, thank you, Nick. And perhaps I can turn to our two economists with to look for a response on that, because this really is such an important question. Who'd like to go with that? Brian?
Yes, I would have thought Noble would be more apt to do this piece, but I mean, I think it is really hard to know where we're heading. I think certainly the short term and probably the medium term, as Nick's saying, looks good because there's such a slug of work coming through that people want to do. The two things that I'm interested in to some extent is how far that will go before it starts petering out and people feel that they've refreshed. Then against that is, where does the economy go? And against that is, where do we go with the, again, as Nick was pointing out, where do we go with improving energy efficiency in housing? Because there's a huge amount of work that needs to be done there, and how that's linked together with overall home improvement is going to be quite interesting to say. But I mean, my gut feeling is that things are looking rosy for a year or so, but outside of that, we really don't know what's going to happen to the economy. And if we go into a period of austerity, there's a good reason to suspect that people might get a bit nervous about spending on their homes and hold back. It's hard. It really is hard to know. I think Noble's probably better placed than I to sort of make that kind of speculative judgment, but that's basically how I see it.
Noble?
I mean, I'd agree with Brian and Nick in terms of the short term. The projects are already largely in the system anyway for the next few months, and largely for the rest of this year. Most of the SME builders are very busy and have projects lined up, and households have the finance. They also have a strong incentive to do it, given that house price inflation is so high. In the UK, on average, house prices have increased £20,000 in the past year. So it's a good incentive to invest in the home rather than spend on other things, even though as social distancing restrictions ease, you will be able to do other things. The savings that people have mean that people in the short term can do both. The problem medium term, looking into next year, is how sustainable is this rate of inflation, house price inflation? And that dictates the incentive to improve the home. What happens once the furlough scheme ends, and will we see an uptick in unemployment? And if we do, then that affects household confidence and willingness to spend. But anytime we've come close to the furlough scheme ending, the government has extended it if needs be. And then looking towards the longer term, beyond next year, then, as Brian suggested, you're looking at the key driver, rather than it being home office or home additional space conversions, you're looking at energy efficiency retrofit, and government is very clear that the existing housing stock does have to be retrofitted. It's quite a job to energy efficiency retrofit 23 million homes around the UK, and that will have to be addressed at some point, even though government's previous schemes to try and address that through the Green Homes Grant and Green Deal have failed abysmally.
Yeah, absolutely.
I think.
Okay, so, sorry, Brian.
Yeah, I was just going to add one other point in, that if you're looking in the much longer term, it might be worth people thinking about the demographic shifts that we're seeing and how that plays through with increasing numbers of older people living in houses that may not be geared up for them, as it were, and whether that provides something. That would be one other thing that I would just chuck into the pot, if you like.
Thank you. Okay, so in the last sort of 3 or 4 minutes that we have left, I have a question which I'd already teed up, but actually somebody from the audience has asked a very similar question. So I'm going to ask them both, but they sort of naturally work together. So look, we've seen a strong rise in homeowners looking to improve their homes. That much is clear from the report. We know the UK's ageing housing stock certainly needs a huge amount of improvement, not least to meet net zero carbon targets set by the government. So the final question that I had was, if you were in government, what would you be doing to tap into this growing appetite among homeowners to make improvements that would both address their needs and help the nation best tackle the long-term issues of improving its housing stock? So that was my question. Question from the audience, very similar, or at least along those lines. The government has this week advanced its aspirations on achieving carbon zero targets, and it's widely known that 80% of all buildings that will be around in 2050 are already built, suggesting that improvements to existing homes will be at the forefront of hitting these targets. With zero VAT on new builds, should the Chancellor in tandem be reducing VAT on retrofit projects, which was a point that was just made, with these aspirations? So if that's okay, who wants to tackle that?
Brian, do you want to go first, and then I'm happy to tackle on it.
I'll just make a few general points on the ageing housing stock argument. Basically, at the rate of demolition that we've got at the moment, half of the existing housing stock will still be there in 3020. That's 1,000 years time. So there's an awful lot of reason to improve the housing stock that we've already got, because the homes we've got today are the homes of the future. The other point that I would make is that I think we need to try to find mechanisms, or the government needs to try to find mechanisms that link general home improvement, where there's clear value added to the homeowner, to the less tangible benefits of, from a homeowner's perspective, the less tangible benefits that derive from making it more energy efficient. So I think tying those together. The third point I'd make is there's no single silver bullet, and actually you have to look at the specifics of a given region or circumstance to be able to derive these policies. So they need to be sensitive to the particular needs of particular communities.
Thanks very much, Brian. Anybody else like to round off the session with further thoughts on telling the government what it should be doing?
I think from government's perspective, they have. It would be nice if they reduced VAT on repair and maintenance, but just private housing repair, maintenance and improvement alone, if government reduced VAT to zero on that, they would lose out on £4 billion a year of tax revenue. And I spoke to them back in 2009 about doing so and stimulating the market during a recession. And they said there was no chance of that happening, and they've been consistent with that ever since, rather sadly. What their energy efficiency retrofit policies have failed for a number of different reasons, whether it's the Green Deal or the Green Homes Grant. What they need to realise is that homeowners are more likely to do energy efficiency retrofit if it's part of a wider package of doing other improvements that they actually want to do for their own reasons, either because the improvements increase the value of the home or because it's something shiny that they can show off to their friends. And at this point in time, energy efficiency retrofit isn't, but if it can be combined with that, and if government policies focus on stimulating energy efficiency retrofit within a broader improvements project, then it has more chance of success.
Thanks very much. Unfortunately, well, we've covered a lot of ground, and we've heard from our panelists on what's driving the spike in activity, where it's been focused, some speculation whether it's likely to mark a permanent shift in the sector, and some pretty erudite thoughts on actually where the government might sensibly be sort of focusing its policy, even if it's you know, in all probability not going to listen. So, as I say, unfortunately, that's all the time we have for today. I'd like to thank our panelists as well as everyone that's come along to hear from them this morning. And finally, to point out that a copy of the Home Improvement Report will be emailed to all attendees later today. So thank you all once again. I wish you all a safe and prosperous 2021, and goodbye for now.